In this video, we will look at two things. The first thing is the financial position, and the second thing is the accounting equation. So firstly, the financial position of the business is described in terms of the assets of the business and who earns the interest in those assets. Where the business got the money from, in other words, from owner's equity or liabilities, to buy these assets. So all possessions of the business should be equal to everything they owe, whether it is owed by the owner, and that we call owner's equity, or concerns outside the business, and that we call liabilities. So schematically, it can be presented as follows. What we have equals what we owe. And normally what we have is known as assets, and what we owe is known as owner's equity plus liability. So from there, we derive then the accounting equation. So the financial position, based on the relationship between possessions and obligations, interest in the possessions, can be explained in a mathematical equation. Now this equation is known as the accounting equation, and the left side should always be equal to the right side. In other words, the equation should always be in balance or be true. The accounting equations can be explained as follows. So in other words, the total possessions equals to the total obligations. In other words, assets are equal to owner's equity plus liabilities. And this is such an important equation to know off by heart, because this is what the whole accounting system was built upon years and years and years ago. So let's quickly look at the terms in this equation and just make sure that you understand them very well. So assets, those are the possessions of the business with money value. Owner's equity, that's the interest of the owner in the assets of the business. In other words, that's what the owner invested in the form of capital, but it's also what the owner has accumulated through running of the business in the form of profits, and then also what the owner has taken out, which is minus drawings. Liabilities, that's the interest of the concerns who the business owes money to. So in other words, that's the people the business owes money to, such as in the form of a loan or money owed to creditors or the bank overdraft. So very important, the two sides of the equation should always balance. And because it is a mathematical equation where the left side is equal to the right hand side, it can also be written as follows. So it can be adapted to suit your own needs. In other words, the needs of what you want to calculate. So if I want to adapt it, I can always put owner's equity on the left hand side, and therefore owner's equity will be equal to assets minus liabilities. If we go back, remember, if I take liabilities over to the other side, the plus becomes a minus. So it's assets minus liabilities. In the third adaptation, I could also say liabilities are equal to assets minus owner's equity. So if we go back to the main one, if I take owner's equity over the equation sign, it changes signs and becomes assets minus owner's equity. So therefore I can adapt my equation to suit my own needs. So the financial position will always be given at a specific time and can be compared with a photo that was taken of the business on that specific day. So in other words, today it will be exact amount of assets in the business, the amount of owner's equity, and the amount owing to concerns outside the business. Now in the next video, we will use these equations to practice how to adapt the equation with certain scenarios. So let's look at a few examples of the accounting equation.